Hey, this is Matt from InvestiQuant. Today is Thursday, September 10th, 2020. And yesterday we saw the markets rally hard. We ended up with trend-like activity up until about the end of the session. Around the last 45 minutes or so, we saw some selling. But the majority of the day yesterday was trend-like activity. And this morning, we ended up gapping up, and we're kind of seeing the opposite action. So we are taking back pretty much all of the range that was developed from yesterday's session. If you look up here on my top left chart, this is the S&P. You can see yesterday's range. So early on this morning, we gapped up and we tested right around yesterday's high, and we are starting to drip back down towards yesterday's low here. In fact, we're about to break yesterday's low, and we just did as I'm recording this now. So we've got the opposite action taking place from yesterday's action. So what I want to do this afternoon is see what has happened with this type of action. So let me minimize these charts, head over to Discover. We'll look at all four instruments. We're going to use an intraday time-based entry for this study that is going to be entering towards the end of the market. We'll use 3:15 p.m. Eastern Time. We'll set it up as a long, and it's going to exit at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, for the setup that we're going to be looking at, we're going to be looking at gapping up. So gap up here after the largest rally of the past 10 days. So yesterday's big up day was the largest close-to-close move on the upside that we have seen in the past couple weeks. So I'm going to use that to put a little context around what has happened here recently. And then I'm going to go into post-open filters and set up this trend-like activity to the downside that we're seeing today. So to do that, I'm simply going to say that the open is in the top 25% of the intraday range as of the entry time. So the entry time is going to be at 3:15 p.m. Eastern Time. So the open is in the top 25% of the range that is made between the open and 3:15. And then I'm going to say that 3:15 price is in the bottom 25% of the intraday range. So this is making a directional candlestick to the downside, a red candlestick forming here. Lastly, I'm just going to put this above the 200 because I don't want to add anything else and remove sample sizes, because this is not the type of action that we see on a regular basis. So I'm just going to use the 200 there, and then I'm going to click View Results. And here we go. So these are the results of going long at 3:15 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when the prior day gave you the largest rally of the past 10 sessions. You gap up after it, and then you start getting trend-like activity to the downside following that large rally. This is taking place above a 200-day moving average. So historically, we've got only 16 samples in the S&P, very low occurrences here. The NASDAQ just 19, the Dow 20, and the Russell 16. So this action is not common historically. And if we look at the win rates on them, looks like the S&P coming in at 31% here, the NASDAQ 42%, Dow 50%, Russell 31%. So I don't see any of these that are bullish. They are all at least leaning to the downside, with ES and Russell being the weakest there at 31%. Let's take a look at the results here. I'm using the S&P here, and I want to look at the results distribution because I can see in the average win and average loss that they are not at all alike. So let me click on this. Again, if you guys haven't seen this yet, this is our new distribution of results. The way it's set up is you've got trade counts on the vertical axis, and you've got the amounts in P&L based upon trading a single contract on the horizontal axis. The further to the extremes you get on either the left or the right, the bigger the move. We've got zero dead center here in the middle. So what I'm seeing here is we don't have very many wins, and the wins that have happened have been pretty small. The wins historically, just 2 and 4 points historically is all that we've got on the upside. And then on the downside, we've got a whole lot more samples, and they vary from 2 to 16 points in downside moves. So historically, this has not favored the bulls, and when they have won, they haven't won by much when this pattern has been in play for the S&P. So hopefully you found that interesting. Good luck, and we will see you next time.